Hello friends, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to markets. Next week, the weekly stock market analysis show where we look at what happened in the market during the last week and how we can plan for a better trade for the next day. And this is analysis for the week that's starting from tomorrow, July 4th, Monday 2022. So without wasting time, let's get into the charts and see what happened. Right, this is the weekly candle of the Nifty and the Banknifty that you're seeing there on the right side. Nifty on the left, right? So it's a hammer pattern, and there's a hammer pattern. Hammer patterns indicates that there is a downfall and there is a recovery from the V-shaped move might have happened, and you can clearly see that there is a window gap and there is a resistance zone that it's unable to clear that. It's also unable to clear the big wide weekly downfall of 3.5% that happened previous to previous week. It's still not closed above that. Same is the case in Banknifty also. It's unable to close above the previous to previous weekly candle, and it is facing a resistance the same gap zone, and that's also a moving average zone. We'll see in the next slide. So that's a weekly candle, clear hammer pattern with a dip and a bounce up, indicating resistance and probably indicating the possibility of an up move also on the medium term. Because occurrence of a hammer during a trend, either downside or upside, indicates the reversal of the trend, potential reversal, not guaranteed, right? So this is not a perfect candle of a hammer in both indices, because the width of the hammer's top portion is a little extra in the case of Banknifty especially. So yeah, so all that we can understand is that there is resistance to the upside. That's clear, right? With the gap and the moving average resistance here. So if that zone is clear, then we have a possibility. Remember, also we are in a downsiding trend line, and if you draw a trend line down here and the top here, it's clearly down trending trend line channel. So it's very difficult to predict where exactly it moves unless and until this gap is closed. If that gap is closed, then we can have more probabilities in place. Let's look at the daily channel, right? So daily we have greens that happened last week, but it was all closing down, lower, low, and low. So downtrending green candles. That means it is all V-shaped moves that happen basically, right? So it's a hammer pattern, right? The green close, a hammer pattern, and it's a fairly wide range bullish candle on the Friday that happened on the Banknifty also. So some strength or bullishness is evident in the candles on the last trading days. Remember, we had a very good recovery of more than near to 5% on both indices after it made a new lower low on the Nifty and a new swing low on the Banknifty. So the good recovery has happened, but it's facing resistance, and it has faced resistance and fallen back, but it's not able to. It's not ready to go further down, and then it just bounce back. That's exactly what you can see in the daily candle. So a hammer could potentially indicate the end of the trend, downmoving trend, and probably a potential up move on the Nifty. And Banknifty, the candles are solid. But remember, as I said, we still has not been able to. We have made a V-shaped recovery, but we're not been able to have a green close above that V at the gap zone, right? That's something I need to be clear. So let's look at another view in the investing.com charts. So moving averages are seen here. You can see that exactly the resistance is at the moving average 20, and there is also a gap resistance up at the 100 moving average zone at 16,200 that levels, right? Banknifty on the right side also you can see its resistance is at the 20 moving average. So 20 moving average closing will be very crucial, and 34,350 would be the zone where the gap would be closed and then it moves further up, right? So Bollinger Bands, what do they indicate? It does not indicate bearishness, even though we know we're in a downtrending trend line move that's happening. This indicates there is bias which is bearish because it's 20 moving average below that. But definitely we can see that the Bollinger Bands, upper and the lower bands, are consolidating or squeezing or contracting. Sideways zone is what consolidation is what it indicates, and not an expansion. Unless an expansion happened downside, it may not be bearishness at the same case by the Bollinger Band. Same is the case of the Banknifty as well. Now look at the support resistance levels, the new updated one. So yeah, also you can make a note that in the daily there is an potential inverted head and shoulder pattern that could happen in the Nifty and the Banknifty also, right? You can see the neckline that's matching with the resistance. It tried to attempt to break that, but didn't happen. So that inverted head and shoulder pattern that you see in the Nifty and the Banknifty could potentially explode and move as much as the width of the head, this much of width, like 15,200. So that can give a good move if it works out. But normally it's more effective. The head and shoulder pattern is more effective on the weekly charts than on the daily charts. But it could work out of it. So there is a probability that we have to make a note of that. So if you look at the support resistance levels, right, the immediate resistance that you can see is at 15,850 to 15,950, so 15,960 retracement level also. So remember, that's a zone where it has to be very cautiously, move big, make a big breakout. So there could be resistance here, there could be again consolidation here, there could immediate rejection that could pull it down further. All these things can happen, right? So if that resistance is cleared in 16,100, 16,200, the next resistance is clear, then above that is 16,350, 450, this branch 50 and 55, 650, 15,700, 750, 15,800, 900, 968, and then 7,000 on. These are the resistance on the upside. Downside simply you can say 15,500, 15,650, the zone where the previous swing low happened the last Friday also, right? And that seems to be a very good support zone, right? 15,500 is a very good support zone. If that is given up, then you go to 15,200, 15,350. If that's given up, then that would mean that 15,200 is a swing low, previous swing low, 15,180 something, 183 something. So that's a previous swing low, new swing low, new lower low pattern that was made by the Nifty. If that's breached, then you go back to 14,900, 15,200, and it could head to much lower levels of 13,600 to 14,150, that kind of zones for the downs. We're not talking about that. That kind of fall may not happen in a week's time. So we're not going there, but these are the levels that you really keep a note, right? So up to 14,900 we are covering, right? That's the supports on the downside. And moving on to the Banknifty, you can see that the immediate resistance that has to be cleared is at 33,600 to 34,350. This one also is coming here. Gap resistance also is coming here, right? So this zone of 33,600, 34,350 is cleared, then we are on the way up. And here also you can see an inverted head and shoulder pattern that could work out, right? And so the resistance above that, if that gap is cleared, would be 34,350, 750 zone, and then 35,000 zones, which is Fibonacci 50, and then 35,600, 35,900, then 36,800, 33,300, 800, that's on. So it goes up like that till you meet the next resistance, that's at 37,500 Fibonacci 23 retracement level. So it's a long way from here. But yeah, so the immediate 34,350 levels clearing is important, right? Support down here at 33,000 to 33,350 zone, which is a major support, and if that's breached in 32,400 to 32,800, which would be somewhere the earlier swing low that was created few days back, and then if that's breached, it could go back to 31,800 to 32,150, and if that is also breached, it could go to 31,000 and 30,500. That zone where it's a previous lower low pattern would get breached if that's broken. So that's support on the downside and the resistance on the upside we're seeing on the Banknifty. Now going back to the momentum, the momentum indicator is RSI that is used in Nifty and the Banknifty. You can see the Nifty, it's in the sideways, Banknifty also it's in the sideways. Banknifty does not really made a range shift. The range shift would have happened if it had dipped further down a little to the 40 and then bounced up, but it's a good rising momentum that you can see sideways. And Banknifty and the Nifty, it's also in the sideways, but it's downtrending. It is not showing a bounce here, so it remains. So both indices shows sideways momentum in the short term, and that's the same the medium term weekly charts also, which is not found here, right? So Banknifty and the Nifty are sideways is what it indicates, right? No divergence are seen as of now. Let's get into the trend indicator, which is the ADX that we are using. The DMI negative is what you can see for the Nifty, and DMI positive is what we are seeing for the Banknifty, right? That means it's bearish zone still in the Nifty, and it's gone to the bullish zones in the Banknifty. But you can see that both the bullishness of the trend and in both Nifty and the bullishness, bearishness trend that you're seeing in the Nifty and bullishness trend that you're seeing in the Nifty, both of them are having a trend which is falling down. So it's no guarantee that it will retain these levels. Both could swing the other way, but it's contrary trend that you can see in both indices. Nifty is bearish, remains bearish, it's not still crossed over, and it's although it's not having good strength in that bearishness, right? So it's contrary. Banknifty is bullish on the short term. So, but on the medium term, you can see that the Banknifty is remaining bearish. The trend still has not reversed in the Banknifty in the medium term. That's the weekly charts, and Nifty definitely also has not crossed over to the bullish DMI positive zones on the weekly charts, right? So momentum not really fully turned to bullish on short term also, and medium term also, so it indicates, but the trend. Momentum, of course, no, it is in the sideways on both time frames. Moving on to the volatility. VIX moved up. India VIX, the fear and greed indicator, was moved up 3.5%. Now it's at much above the 20 levels, which is 21.25. And that's a small spike that has happened. Remember, we had a bigger spike, so it could further go to 28 kind of levels. So it's possible, and it's still at a danger zone. Any VIX rise above 21 indicates that there is uncertainty that is in the market, and you have to be cautious, especially when you are trading with derivative instruments and options and futures and all this kind of instruments. And that's about the volatility. The volatility is high, and you have to be cautious, right? Cut short your position size and trade cautiously, right? Moving on to the open interest analysis. The futures open interest analysis are contrary, just like how the trend is contrary on the short term and the medium term, and how the trend is contrary in the short term. Similar to that, the futures open interest is showing that it's bullishness in the Banknifty and bearishness on the long, right? On the Nifty, right? It's a long unwinding, it's a bearish move that is indicated by the futures op YI, and short covering, it could be exploding up move that is indicated on the Banknifty. So that's contrary again on the trend or short term and the open interest futures. And open interest of July 7th, the next weekly expiry on the Thursday, can be seen on. We'll see the levels of the options open interest analysis in the next slides. But before that, the main thing that you have to look out is that the put call ratio is 1.0, so it's bullish on both indices. So bullishness is clearly there in the derivatives on the first week of the July. First weekly expiry of July is bullish basically. Except that there is some long unwinding in the Nifty, which is not which is indicated by the futures OI. But options OI, if you see, it's clearly bullish, right? And look at the levels that you are seeing for the next expiry. So the highest put trading is seen at 15,500 or 15,000. Both the highest is 15,500, then 15,500. The highest call trading, where the resistance can be seen, is at 16,500 and 15,800, right? So these are the zones where the call riders think that it may fade. It may take some time to clear that levels on the upside, and it may take some time to break the lower levels of the. So 15,500 we had taken as support. So in the charts also we had seen last week, we had made a swing low and then bounced up to make a fan, but at the 15,500, so that could be a good support zone, and it's very unlikely that 15,000 can reach this what indicated for the next week, right? Same the other side of the resistance also. Banknifty, look at these levels. 33,000 is where the highest put options are seen, and 34,000 is where the, so the range is small, 1,000 points range. That's where the 34,000 is where the highest call writing is seen, by the option writers. So the second level of highest put and call writing is at 32,500 and 33,500. That's fairly wide, right? So that's how it is. And 1.07 PCR put call ratio in both indices indicates that clear bullishness is there in the options OI and that's in both indices. Although futures OI is showing that there is some contrary movements of long unwinding and short handling that's there in the indices, right? Moving on, sectorial watch. What happened last week was it's a mix. Yeah, so it was mainly a bullish one. There was across the sector move up that has happened. A weekly charts, if you see, the IT sector moved up 1%, metal moved up 2%, auto sector moved up 1%, pharma slightly moved up 2.6%, FMCG moved up 2.8%, and reality also moved up green, 2% up. So across the sector, movement on the upside is seen, but although we are seeing a candle that is closed below the previous week's close on both indices, you can see that in the sector wise there is a good up move that has happened across the sector, split across, right, between 1 to 2%, 1 to 3%, right. So IT sector, we can see that it's moved in the sideways in the short term, but it's still in the bearish, so we'll have to wait for the moment to catch. And metal also has caught up after a big fall, but it's bearish on both the time frames, the weekly and the short-term daily charts, both. Auto sector remains bullish on the, so two sectors remains bullish, auto sector and FMCG both are bullish with respect to the momentum on the short term, right, but both sectors are facing bearishness on the medium term. So you can either take low position size, tight stop loss bets on the short term. Swing trades could be attempted, but be cautious. But confidently, you may have to wait till the FMCG and the auto sector gets in the bullish zones on the weekly charts as well from the momentum perspective. So farmers kind of not a big movement, but fairly good 0.6% out. But we can see that there is indecisiveness that you can see in two places. In the metal as well as the farmer, you have indecisive doji that has happened, although there is an up move that has happened on both, right? So that's something that you have to keep a note on. But we had a gap up move. The gap up move is the same in the FMCG, which is showing clear bullishness, right? So FMCG and auto sector that you have to probably look out on the long side for the next week. So reality also moved up, and it also had a gap up. That's something you have to keep a note. 2% up, and then the momentum remains sideways. The thing is, the momentum in reality has not moved to the bullish zone, even in the shorter time frame. So watch out for auto and FMCG on the bull side, and watch out if any of these sector like IT could get into the bullish zones or not. Right? That's a sector we'll watch for the next week. Same thing that we had discussed. We are elaborating the charts. You can clearly see that the IT sector had fallen down, broken the supports, and then big downfall of more than 20% of downfall in alignment with what is happening in the US market in the downside. Same thing happened. It reflected in our IT charts, but there is a green candle, weekly candle that formed previous week, and this week it could not sustain to close above that with the green close, but it definitely shows that it's trying to root and move further up, although the momentum in the weekly is still in the bearish zone. So it is attempted to reverse, but not actually what it indicates. And metal also, you can see that it has made a big crackdown from the previous resistance zone, and there is indecisiveness in momentum is bearish. With the doji, that's what you can understand. And auto sector is, you can see that it is 2017 resistance, very close to that, but it's it is still a big hurdle that has to clear on the upside. And although it has moved up, it ended up with a red. It could not sustain the resistance on the upside, clearly evident, although it's much ahead. Right, the momentum is on the upside rising, but it has not climbed to the bullish zone set, right, on the medium term, and definitely bullish on momentum side on the short term. Right. As you can see, it still has resistance to clear on the upside. It's attempting that, yet to get in the bullish zones, or at least the sideways zones on the weekly is what it indicates. FMCG, you can see the big gap that has happened. Reality also give big gap up, and then just on the edge of getting in the sideways on the medium term. But the real bullishness is much evident, very much evident in last week in the FMCG. That's what we have to watch out. Now moving on to the index heavyweights, we have the HDFC Bank, which is trying to hold on support zone that it had conquered the previous week, and momentum is in the sideways zones. Come to the HDFC, the twin partner of HDFC, it's showing that it's doing the same, and it had a big reversal, green close that has happened, and then managed to close above that. Momentum is climbing to the sideways, and hope it retains that levels. So the crash that brought the market down definitely was at Reliance, and you can see that the last 4 weeks we have big downfall that has happened. Now it's at a neckline of a rounding pattern break from where the breakout had happened several months before. Right, momentum is dipping the sideways and falling and not rising on the weekly medium term. So there is definitely weakness, and it's at a major support zone. So as long as it holds the support zone and consolidates the zone in the medium term, it should be okay. But if it crashes further down from this neckline zone, it would indicate that we may be heading to the downside. So we have to keep a close watch on if the momentum is remaining the sideways, and this levels of the neckline of the breakout zone is maintained, or is it going to breach that, is what you have to clear. So disappointing performance from the Reliance last week. I believe it is a fundamental news of the tax that was introduced on oil sector export that could have triggered, but otherwise it was moving well ahead, and it was one of the strongest holds that has been holding the Nifty all this time. So that is gone. The index heavyweights, the IT sector 2 stocks in first, and TCS is there. You can see that it's trying to reverse and then climb back to the support zones. TCS clearly showing that it's on the edge. It has breached that major support zone, and it is attempting again and again to move up after having a very good weekly close, green close on the previous week. Right, it's a reversal attempt is what you can see, and although it is still fully not reflecting all the IT stocks like Infos, you can see they're still in the bearish zones, but TCS has managed to climb with these sideways zones. Now what is remaining is the heavyweights, ICICI Bank. ICICI is definitely facing resistance in and while it is making an attempt to climb back from where it had slipped down. Momentum is safely in the sideways zones. Kodak Bank is also at a major support zone, which I don't think it's going to breach that easy. Momentum is also at the support zone, so it could save effort. So there is very less likelihood that it could breach the support zone. It's very long holding since several years or couple of years at least. And breaching that would be not a good thing for the Kodak Bank. But there is every possibility that it takes the support here and then bounces up back. Right. Basically, it has been doing this consolidation upside and downside zigzag move since very long, and there is every possibility that it may continue because it is corrected a lot from the top. If you can see. I say, meanwhile, it all depends on whether it's able to have a green close above this resistance zone from where it had slipped, and whether it's able to maintain the sideways momentum that it is having on the medium term charts. Moving on to the institutional participation, you can see that there is institutional selling from the Fyers that continues, and institutional buying that's there from the DIs that continues, and was one. It is more or less the same, right? You can see that there is a selling that has happened more. 6,800 crores of selling has happened on the cash market, and domestic is almost made it to near to the 6,000 crores of buying to catch up with what the Fyers are selling. Right, and the derivative side also it was kind of flat. So institutional participation was not great, but for some reason there is confidence in the market from the retailer side, and then mutual fund money is flowing in there, and then the domestic institutions keeps buying, although the FI institutions are taking away the money when the interest rate highs are happening in the US markets, right? So let's get on the US global markets and see the global commodities in the markets. What are they doing? So US markets, you can see that this is Dow Jones. It had made a very bullish, big weekly mega bullish candle previously, but it could not sustain to close above that candle, and then it's facing severe resistance, and it's a red close, but managed to hang on. Dow Jones in the sideways zone, but it's not happening in the S&P 500 and the Nasdaq. You can see that the momentum is facing resistance and fallen back in the bearish zones on both, and bearish candles can clearly be seen. So it is facing big selling pressure on the top. Last week is what 1 to 5% is what 1.5 to 4% of downfall is what is seen in the US markets. You have to be cautious because our markets will reflect what the US markets big moves in every single day. Right. So weekly there is every chance that the US markets can continue to fall down and probably go back to where it had fallen, made the previous swing low. There is a possibility that it can consolidate also, right? So big moves if they are happening in the US markets any of these days in the next week, that they would be definitely reflecting our markets in red. Now it's not pretty picture from the currency side. Also, dollar index has gone to 105.2. It's 1% further movements. It's multi-year breakout is what is happening in the dollar index, and USD INR is also made all-time highs, and it's near to 79 rupees for a dollar. Right, so PS weakened to the lowest point. Clear underperformance of the rupee there, and the RBI interventions does not seems to be happening much since long time, and looks like it's heading towards the 80 rupees zone. Crude oil is also in bad shape, in 106.5, 0.5% further up move, and that's what you see here, right? So it's in a trendline channel, and it's unable to maintain the level below the 100 for long, and it's shooting up, and then sell-off happens, and then comes down near to 100, and again shooting up. That's what is happening. So very high momentum, and crude is at high levels, which is not good for our country. Along with the US dollar hike and the crude oil hike, the economy would find it and hard to sustain during this inflation times, and same would reflect in the stock market also somewhere or the other, right? So gold, you can see that surprisingly when the markets are crashing, markets had already corrected a lot, but gold does not seem to be in a mood to move up yet, although there is some gold spike has happened in India alone, but internationally you can see that it's a bearish week that has gone by of gold, bouncing up from with a hammer closely near hammer pattern, bouncing up from this support zone. So neither is it ready to fall down because it's a hedging instrument and it's not ready to fall down. But the thing is, it's still not breaking out and making new high. It's still not gone to that stage of the corona times. It's like our digital corona times, not doing that. Remember, there is not a big movement that can be expected in the gold for several years. The consolidation is what is happening, and it continues, right? So, but there is a big mega downfall in the market that happens like in the gold times. That time it could export, but otherwise, most of the time it consolidates. Is what you can see. That's exactly what is happening, right? It's consolidating a very tight range, but not on the lower side. It's consolidating on the upper side there. So that's something you have to keep a close watch. These instruments could still work out as a hedge for covering your long-term quality investments, what I feel. The two picks for the next week, one is having a rounding pattern, other is having a rounding pattern and cup and handle formation that is seen on the medium charts, and the auto sector itself is doing great, and the TVS Motors has broken out and even a weekly green close. Any movement, price movement above that candle weekly close would mean that this is going to break out. Remember, it has already broken out. Now that it's sustained or not indicates whether the price moves above that. Remember, it was 2017 3 plus 2, 5 years of resistance that we're seeing. See, look at the momentum, it's rising. Look at the trend, it's rising, and then the strength of that is super, right? So TVS Motors giving good breakout, and this may give swing in personal entries, and obviously the stop loss would be at the neckline, and the entry would be a price movement that happens above the previous candles. The weekly candle that you see here, they're close above that, right? Similarly, a pharma stock, Dr. Reddy's, is showing a downfall, a handle formation of the cup and handle, and you can clearly see in that it's trying to close above the support zone which it had breached earlier, and then any green close above that support zone, which is a neckline, would be a stop loss as well. Any move above that would be an entry as well, right? So it could give a clear move of more than 1,000 points at least on the upside until it faces the next resistance on the upside, right? So the momentum is in the sideways on the medium term, and when the price gives a green close, probably the momentum may be hitting the 60 above, and that may be the time to enter. So the entry here has to be cautious. Only if you are getting a confident green close should you enter. So this may be it has to have a tight stop loss on the decline itself. You may get stopped out, but you can re-enter if the up move happens in the cup and handle formation. If it's falling down, then that's it. You lose more, and when you get it, you gain big. That's also. There's no clear entry signal yet on the Brokerage, but there is some indication that the up move may continue, and the pattern is showing it's a bullish pattern, and it could be there is a likelihood that the cup and handle, the handle part is over, and then a breakout could be happening. It's more of a positional or a swing with more number of days in it that may work out here, but clear signal is not there. But TVS Motors are already given the signal upside. Whether to sustain or not, will it end up as a false breakout or not? It's not in our hands. You just have to put the stop loss at the neckline below the entry candle, and above the entry candle make an entry, right? It may give a swing trade, but a positional trade also it may work out, right? Because momentum and trend indicators and patterns are bullish on both, right? So that's the stock mix, and then more options trading strategy is double diagonal color spread is what you see here as I come up with every week. It is giving good risk reward, good probability of profit, and the range is superb, right? 15,300 and 16,200. 16,200 is where the gap is there, and then very less likelihood that it could reach that next week, and very likelihood that it will reach 15,500 zone also. So that's a good range that we are getting, and good risk reward also. But get out of this trade the moment you get 1 to 2%, 1.5 to between that, depending on how. And the position size has to be as per your capital size. Lower the position size when the VIX is high is wise, right? That's the option double diagonal color spread strategy that's there. And to wrap up, so what happened? We had a big bounce up after a swing low that happened last week, and now we are facing resistance. It's unable to move further up, right? And it's kind of consolidating, clearly seen on momentum side as well as the Bollinger Bands side. And put call ratio is showing bullishness. So the options that are showing it's not bearish, it's bullish. It's consolidation that is shown. Sideways momentum is what you see. So you cannot say it's bearish, right? But some mild bearish touch is there in the price patterns. So that's why so this bearish call, mild bearish call, not really bearish, mild bearish, cautious bearishness that I am seeing there is just on the price patterns and the resistance zones that is there with the belief that just cracking the resistance in a downfalling trend line fall may be tough is what I feel. Otherwise, I would have turned it to mild bullish, right? So because there is a mixed pack of options bullishness, sideways movement on momentum and Bollinger Bands, which indicates there is a good element of chance that the market may move up and down, zigzag sideways, or it could so it's a mixed bag. So I put my weight more on the bearish side, looking at the resistance spot, right? But otherwise, it's all short-term calls for the next week, till the next expiry the call. So there is a chance that it can remain sideways and not turn bearish, or it could turn bearish and then come back to, on a week-to-week basis, it may end up as sideways also. It's a possibility. Now the US markets, you can see the weakness, that is the bearishness that is evident in the US markets. So resistance clearly evident in the US markets also. Now markets also, we face resistance. So if there is a big downfall that happens further from in the next week in the US market, then that will reflect obviously in our market, and we will also crack down. So a lot of uncertainty is there, clearly evident with the 21 plus of India weeks, right? We have global recession fear, there are poor rate hikes, the US inflation, the US Fed rate interest hikes, the Russia war that is going on, the crude oil that's high, the rupee weakening. All this is clearly indicating there is uncertainty in the market, and anything will happen overnight, right? Anything could happen. So you keep a cautious watch on when you are doing the trading perspective and the investing perspective. The positive factor is it's not ready to make big falls. It's consolidating, and dips are getting bought, and DAs continue to buy every single day when FIs are pulling out demand. So India VIX is closed about 20, right? 21 plus basically. So it's area to be cautious about because of uncertainty in the market, and close about 16,234,350 of the indices. Nifty and Banknifty is the only place where we can better. Only if that's clear, then we can say that there is a possibility of moving. Until then, there is every possibility that it can make go back to where and make another swing low, or at least go back to where it came from the low side, right? So momentum is something that we have to keep close watch. It's sideways, but would that sideways hold on, or would it breach again? Right? If it breaches, then we may be making new low. So we have to be very cautious, right? Anything would happen in such kind of markets with a lot of uncertainty out there, right? Global recession and global inflation fears are not great clues for expecting the market to move up, right? Whether the market will sustain the sideways move is what we are, or would there be an expansion on the downside is what we are to be cautiously watching out for. So always make use of covered call strategies and other option strategies to hedge your long-term quality investment positions, and invest in, to hedge means to get the rental incomes. And if you're investing, invest in make use of the cash covered puts, and in S&P mode you can buy the stocks at a lower price, and quality stocks at a lower price during the time when the market is correcting itself, right? So overnight positions, anything would happen. Don't take the risk of having unhedged positions, and because it could wipe out your capital. So always hedge your positions and know what you lose, and you make sure that you're still in the game the next day when the market may be in your favor, right? So that's my view. As mild bearishness to sideways movement is what I have. So I hope this helps you to come out and with your own market view for the next week. If it helped you in some way, then consider hitting the like button and share it to maximum. We have very few subscriptions, and I appreciate your help. Thanks for watching. Happy trading, happy learning. Bye.